It's great to see you again. As you can see from the start of the year, it's been absolutely flying, especially from last year. Whilst 2019 was an extremely tough and tumultuous year for most, especially mentally, as well as, invariably the market was stale with Brexit and one thing or another. Obviously this year we've got Coronavirus, which has had a tremendous effect on the market this week, or last week, sorry, when you've seen 15% losses both in the UK and the US and globally. Now, it seems like the panic is one thing, but we do need to be aware of this. We do need to look after ourselves and certainly those around us. So if you aren't feeling particularly great, be sensible, do keep yourself confined, do keep yourself away from others, and make sure that you're doing the right thing by other people, because otherwise, especially if you're in the city and you're in big firms, you're going to affect a lot of people very, very quickly, and no one wants this. I know that a number of firms have got contingency plans to work from home. This is something that more and more firms are looking to do and making sure they have got an emergency plan. It certainly makes sense. Obviously, it makes it slightly more tricky from the banking perspective, especially with trading and execution. However, we have heard from a number of CEOs that they are certainly or have certainly got these in place, and they can, to a degree, adopt an element of execution from home. Now, that aside, one thing I've spoken about over the last probably 3-4 years in particular, since Brexit came in and the market started to restructure both on the buy and the sell side, there is certainly an element of change, more so now than ever before. I've said it a lot before previously, 2020 was always going to be a period of change, and that is certainly going to be the case. Whilst there's change, there's also progression. So where the market is currently, and I know a lot of people out there are concerned about their jobs and where the market's going and really what's going to happen moving forward. However, the way I see it at the moment, there are genuine opportunities out there. We are looking at a market which seems very similar to that of the mid-80s. It's very ECM focused, it's very regional focused and sectorial focused. Everyone seems to be going back to their lanes, so to speak, which is no bad thing in any way, shape or form, because it means invariably if everyone focuses on what they're good at, one, the clients get better service, and two, there's less crossover and less competition in many respects, which means we can all earn in those areas that we are genuinely good in. Now, it seems perfectly sensible to me, and really it's where a lot of banks and businesses are focusing at the moment. Now, one thing that I touched upon really the last few years in particular is that banks and businesses are going to find it harder to hire talent. Now, that's not because there aren't that many people around, but it's to do with what they're looking for and where they're looking for it. As we're in a situation where costs are certainly rising from regulation amongst other things, but the other situation that's happening is to find an element of revenue progression. So where's revenue going to come from moving forward? And at the moment, banks are struggling to find additional revenue streams. So if they can't find additional revenue streams, one thing they need to do is certainly lower cost bases. Now, I know this isn't going to be particularly wonderful for many to hear, but I genuinely believe that as we come into sort of September this year, we are into a new cycle. Now, this new cycle is going to lead us into a rough kind of view of most people getting paid between 100,000 and 250,000, really at the top end. This is a medium rather than anything else. So, you are going to get people who will earn more than that, but those will be revenue producers and certainly those who can add value to firms at a high level. It's not just about connectivity with the tier one banks, but it's how people can make revenues for the firms they're in that are slightly smaller. Again, going back to a mid-80s banking and brokerage mentality, this is really what happened back then. A bonus was exactly that. It was a bonus. It wasn't to be expected. It was something that happened really, firstly, if the firm did well, and then secondly, if an individual does well. You have to remember, in whatever seat you're in, especially in a non-tier one firm, you are affected by the business. If the business doesn't do well, invariably your bonus isn't going to be strong. And in the tier one firms, one thing we've seen quite dramatically, especially on the cash side, bonuses have been hit by 30-40% this year, and really it looks like it's going to be decreasing more and more. The other element we've seen is, and I know we've discussed it before, juniorization. Now, juniorization is not something I don't like the word, to be fair, because it certainly has a negative connotation. There is a genuine element that juniorization is here, which basically means those who have got, say, between 15 years and below, they're the ones that are going to be moving this business forward for the future. Those who are above that mark are certainly in a situation of, well, there's questioning over where they move forward, how they progress, and really, can they really achieve what they want to on a financial package? The immediate answer seems to be no. However, if you're in a position, again, of revenue generation, there is always possibility to earn more. Now, the one thing I applaud everyone out there, do not focus purely on the revenues for self-gratification. That is not something that anyone should do, first and foremost. But when you're looking at your bonus and hoping that that's going to be the key to how you feel, or even how you feel you've done throughout the last year, it's just not the case anymore. The bottom line is many banks and brokers and businesses out there cannot afford to pay you the bonuses they once could. So it doesn't mean because you've had a, let's say, a slightly more negative bonus than you were expecting, it doesn't mean you're not valued. It doesn't mean you can't have a good career. And it certainly doesn't mean you can't progress. So it's very, very important to keep a mental note of that whenever you're getting your bonuses, especially in this season. Do not be and do not feel depleted more than anything else. Remember your value. Remember the words that are coming to you, because we've had it many times when managers have said, well, look, your bonus is down 30, 40, 50%, but you're a valued member of our team. You're doing a great job. Do remember that and look for the long term. And we've certainly heard scenarios of people being down 300-400% on their bonus, which is very, very difficult to take. However, again, it's all about long-term mentality. If you think for the long term, you will achieve for the long term. Short-term gains is not going to be how this business will move forward. As I said, we are coming to an end of a cycle which I believe will almost end as we come towards the summer this year and start again in September. The one thing I will leave you with, I know people are concerned that there is no hiring taking place. I can tell you this categorically, that isn't true. We've had a much busier year than last year already. It's certainly been extremely positive. There are many firms out there looking to hire across a plethora of roles, whether it's research, sales trading, CEOs, quant traders, PMs. There really is a very, very strong foothold out there. And whilst the buy side looks to change, we know for certain that there's some very, very exciting times on the buy side, some very, very exciting funds coming about. And on that basis, we can all be pleased and thankful that we are coming out of what has been a very difficult period and into something certainly brighter. Again, please look forward to the future, look long term, and make sure you fulfill yourself in other ways, just looking for that bonus. Until next time, I can't wait to see you again. And please, if there's anything you need, pick up the phone, give us a call, send us an email. We'll always try and do our best to get back to you straight away, and we'll always try and direct you to others if we can't help you, but we'll certainly give you the advice that a lot of people are looking for at the moment. And also, if you haven't picked up our book yet, please look at the Survivor's Guide to Your Career Today. It is something which is certainly helpful for these difficult moments indeed, and throughout interviewing. And dare I say it, there will be another book coming in the next year or so. It is certainly in the works at the moment and will be applicable to absolutely everyone, not just about your career, but certainly about your life. Thank you again and see you soon. Take care.